Chapter 11, Accounting from Incomplete Records. So here, let us see what is the meaning of incomplete records. Accounting records which are not strictly kept according to double entry system are known as incomplete records. Many authors described it as a single entry system. However, single entry system is a misnomer because there is no such system maintaining accounting records. It is also not a shortcut but as an alternative to double entry system. It is rather a mechanism of maintaining records whereby some transactions are recorded with proper debits and credits, while in case of others, either one side or no entry is made. Normally, under this system, records of cash and personal account of debtors and creditors are properly maintained, while the information relating to assets, liabilities, expenses and revenue is partially recorded. Hence, these are usually referred as incomplete records, which means that when coming to the organization, if they are not following the double entry system, at that time some of the entries will not be recorded in the particular accounts. So such accounts is called as incomplete records. So here, to find out the proper profits or losses, or to find out the financial position of the business, it is compulsory that an organization have to follow the double entry system where all the entries have to be recorded. But when coming to incomplete records, some of the entries will be missing here. So out of that, we cannot prepare a particular balance sheet and we cannot find out the profit or loss. So that we have to prepare some accounts to overcome this particular problem or to overcome this particular situation. So let us see the features of incomplete records. In incomplete records may be due to partial recording of transaction, as it is the case with small shopkeepers such as grocers and vendors. In case of large sized organizations, the accounting records may be rendered to the state of incompleteness due to natural calamity, theft or fire. The features of incomplete records are: it is an unsystematic method of recording transactions. So where there was no system of recording the business transactions, it was unsystematic. So where whenever the transaction occurs, they used to record the entries, and sometimes the entries were not recorded also. And the second feature is, generally records for cash transaction and personal accounts are properly maintained, and there is no information regarding revenue and or gains, expenses or losses, and assets and liabilities. So when we take the example of small shopkeepers or vendors, what they will do, they will maintain a proper account for their personal accounts, so that what they are investing and what is the debtors or what is the amount they are supposed to receive from the particular person. But they cannot find out what is the revenue or what is the gain or what is the expenditure or what is the losses and what is their asset and what is their liability, because of an unsystematic bookkeeping. And the third feature is, personal transactions of owners may also be recorded in cash book. So here, when it is unsystematic, what happens here, even the personal accounts or personal transactions will be recorded in the cash book. So here, when coming to the organization, we make a habit of maintaining a cash book according to the law. So where according to the guidelines, we have to prepare a cash book where only the cash transactions of the business will be recorded. So where business is separate and ownership is separate. So none of the personal expenditure or none of the personal transactions will be recorded in the cash book. And the next feature we have is, different organizations maintain records according to their convenience and needs, and their accounts are not comparable due to lack of uniformity. So here, when different organizations are following different accounting system or they are maintaining according to their convenience, at that time we cannot compare the accounts of one organization to the another organization. Again, it is a unsystematic method of accounting records. Then the next feature we have is to ascertain profit or loss, or for obtaining any other information, necessary figures can be collected only from the original vouchers, such as sales invoice or purchase invoice, etc. Thus, dependence on original voucher is inevitable. So, what happens here? When there is an incomplete record of system, or when they are maintaining accounting records which are incomplete, at the time there will be no proof, or they will be not having any original vouchers. So, here at the time when there was an incomplete record, at the time we can find out the profit or loss, or if we want to obtain any of the information, at the time only we can obtain is from the original vouchers. And the next feature we have is the profit or loss for the year cannot be ascertained under this system with high degree of accuracy, as only an estimate of the profit earned or loss incurred can be made. The balance sheet also may not reflect the complete and true position of assets and liabilities. It is very clear that when some of the transactions are missing, or the records what we have maintained is incomplete, at that time whatever profit we want to calculate, it is not an exact profit for the business. And even when the records were incomplete, the financial position what we want to ascertain, that the position we cannot be find. The total of the balance sheet with the liabilities, even it will not be tallied. Now let us see what are the reasons of incompleteness and its limitations. It is observed that many businessmen keep incomplete records because of the following reasons. This system can be adopted by people who do not have proper knowledge of accounting principles. So here incomplete records are those which can be accepted, or which can be adopted by the people who do not have proper knowledge of accounting principles. And the second thing is, it is an inexpensive mode of maintaining records. Cost involved is low, as specialized accountants are not appointed by the organization. So it means that when coming to the incomplete records, it is maintained by the owner itself. If the vendor is maintaining accounts, he himself is preparing the accounts, but he is not going to appoint any of the accountant, so that the cost is very less here. Because of the cost, the vendors were maintaining their own accounts. And the next is, time consumed in maintaining record is less, as only a few books are maintained. So here when coming to the single entry system, or when coming to the incomplete records, the number of books which they are maintaining are very less, and the time consumption will also be very less, so that the small traders are intended to follow the single entry system. And then it is a convenient mode of maintaining records, as the owner may record only important transactions according to the need of the business. So here when owner is not appointing the accountant, he will decide that what transaction to be recorded and what transaction to not be recorded. So here for which transaction he feels that it is important, only that transaction is going to record. So it is a convenient mode of maintaining records. So here overall, however, the mechanism of incomplete records suffers from a number of limitations. This is due to the basic nature of this mechanism. Broadly speaking, unless a systematic approach to maintenance of record is followed, reliable financial system cannot be prepared. So it is very clear that until and unless the systematic method is not followed, till that a reliable accounting or a reliable financial system cannot be prepared. Now let us see the limitations of incomplete records. So when coming to the limitations, we have, as double entry system is not followed, a trial balance cannot be prepared, and accuracy of accounts cannot be ensured. So as I already discussed that when they are not following the double entry system, there will be no accuracy in the accounts which they are preparing. And the second limitation we have is correct ascertainment and evaluation of financial result of business operation cannot be made. It is very clear that when the accounts or what are the records we have maintained, it itself is incomplete. At that time, we cannot find the financial result and we cannot obtain the business operations which we have made. Next limitation we have is analysis of profitability, liquidity and solvency of the business cannot be done. This may cause a problem in raising funds from outsiders and planning future business activities. So here, when we don't have any complete accounting records, we cannot find out the profitability, liquidity and solvency. Profitability is what is the profit we are going to earn today and what is the profit we are supposed to earn tomorrow. So that is what profitability. So here then we have liquidity. So liquidity is what debts we have in the business, how soon we can clear that. So what is the liquidity ratio of the business, what are the assets we have, how fast we can convert the assets into the cash so that we can clear the liability. And solvency. Solvency is what debts we have, whether we are in a position to clear those particular debts or not. So these things cannot be ascertained when we are following incomplete records. When we cannot ascertain these three things, at that time it is very difficult to raise the funds from the public or from the outsiders. And the next limitation we have is the owners face great difficulty in filing an insurance claim with an insurance company in case of loss of inventory by fire or theft. So when coming to the insurance claim, if there was an accident in the organization, at that time if we have an insurance policy, we can claim the particular loss from the insurance company. But it is only possible when you have accounting records. If not of this year, at least you should have of a previous year, so that they can find out what is the stock which is actually destroyed and what claim they have to pay. When there is no records, at the time insurance company will not pay a single pie. So the owners will face a more problem, or they will face a great difficulty for filing an insurance claim. And the next limitation we have is it becomes difficult to convince the income tax authorities about the reliability of the computed income. So here, when the records what we have maintained, it itself is incomplete. So what happens here? So what income we have calculated and what profit our accounts are showing, it is unreliable. So it is very difficult to convince the income tax authorities to prove that what profit we are showing, it is the actual profit, because of incomplete records, the income tax authorities will not agree for the profit what we are showing. Ascertainment of profit and loss. Every business firm wishes to ascertain the result of its operation to assess its efficiency and successes and failures. This gives rise to the need of preparing a financial statement to disclose the profit made or loss sustained by firm during a given period of time, and the amount of assets and liabilities as at the closing date of the accounting period. Therefore, the problem faced in this situation is how to use the available information in the incomplete records to ascertain the profit or loss for the particular accounting year and to determine the financial position of a entity as at the end of the year. This can be done in two ways. So one is preparing the statement of affairs as at the beginning and as at the end of the accounting period, called statement of affairs or net worth method. And the second is preparing trading and profit and loss account and balance sheet by putting the accounting records in proper order, called conversion method. Now let us discuss what is statement of affairs. So here, under this method, statement of assets and liabilities as at the beginning and as at the end of the relevant accounting period are prepared to ascertain the amount of change in the capital during the period. Such a statement is known as statement of affairs. So statement of affairs shows asset on one side and liabilities on other, just as a case of balance sheet. The difference between the total of two sides is the capital. Though statement of affairs resemble balance sheet, it is not called as a balance sheet because the data is not wholly based on ledger balances. The amount of items like fixed assets, outstanding expenses, bank balances, etc. are ascertained from the relevant documents and physical count. So here, when coming to the statement of affairs, it resembles as same as a balance sheet, but even though we cannot call it as a balance sheet because the records were not taken from the ledger accounts. So here we are taking a records from the physical count and from the documents. So here, why we are preparing the statement of affairs? We are preparing for the opening balances and we are preparing for the closing balances to find out the capital which was there in the business. So now let us have a look on the format of statement of affairs. So here is the format. The title will be statement of affairs, as it will be on the beginning or it will be at the end, and the format will be as same as the balance sheet: liabilities amount, assets amount. So when coming to the liabilities, we already know what are the liabilities will be having. So like we will be having bills payable, creditors, outstanding expenses, and the difference what we are going to get, that will be termed as capital. And coming to asset, we already know that what are the fixed assets and current assets will be having, like we will be having land and building, machinery, furniture, stock, debtors, cash and bank balance, prepaid expenses, and capital, which will be the balancing figure, where the capital was shown in the both the side, where the total of liability side is more than the total of asset side. Capital will be shown in the asset side and it represents debit balance of capital. After that, we are going to prepare the statement of profit and loss account. So it will be prepared at the end of the particular year. So where the format will be having one particulars and will be having an amount column. So at the beginning, what we are going to take is capital as at the end of year, computed from statement of affairs as at the end of year. So then we are going to add drawings during the year, then we are going to deduct less additional capital introduced during the year, and the total what we are going to get is adjusted capital as at the end of year. Then we are going to deduct capital as at the beginning of year, which is computed from statement of affairs as at the beginning of year, and the difference what we are going to get is that will be profit or loss made during the year. If the net result of above computation is a positive amount, it represents the profit earned during the year. In case the net result is a negative amount, it would represent the loss sustained during the year. The same computation can be done in the form of equation as follows. So where profit or loss is equal to capital at the end minus capital at the beginning plus drawings during the year less capital introduced during the year. So what format we have discussed for the profit and loss, same we can apply in case of equation. So where the equation was profit or loss, which is equal to capital at the end minus capital at the beginning plus drawings during the year minus capital introduced during the year.